have Neil Gandal from Tel Aviv University, who's been working in the digital area before it was even a faddish thing to do, and is now working on. This is really an interesting departure for you now into pump and dump schemes online. And one of the things that's very characteristic of Neil's work is he will wander bravely, courageously into all kinds of interesting questions. So I'm always looking forward to hearing about your work. So take it away.
Okay, Shane, thanks for inviting me. And also, Jamie, thanks for all of your hard work to put this together. First of all, the in-person one that we had set up in May, which didn't quite happen for some reason. And now this one. So thanks again for all of it. You're really great. And this came out of this, me presenting here came out of Shane visiting Tel Aviv. And the same thing that Shane says about me goes for him as well. We're of the same vintage. We kind of both wandered into the digital world when it wasn't digital, and people told us it wasn't worth even looking at, but we didn't pay attention, fortunately. And even now, just before the seminar went down, we had a little bit of a chat about what we're doing, and ironically, we're doing something very similar. So it's not surprising. So anyway, maybe I told a couple of you, or maybe I didn't, but I expect the seminar to be more of a discussion than a talk. I prefer that people just talk all the time. I mean, I know, Shane, I know you, so I know you'll talk. Chiara's Italian, so I know she'll talk too. I mean, so anyway, and I hope the rest of you are this way as well. Just, jump in, because I'm interested in getting great feedback, hearing things about it. It's a fun topic to work on. I mean, we have been working for a while, this team. We've been working on, I guess you might call, like, the economics of digital crime or price manipulation. And it's a nice team because it's a team of computer scientists and economists. Actually, it's too many computer scientists. Maybe don't record this part, Jamie, but I mean, I'm just but I'm the only economist here. But it is fun because when you work with the computer scientists, you don't have to think about, okay, we have some great data, let's try to answer a question. You can say, these are the questions I want to answer, somehow get the data, okay? And that's kind of what happened in both of these projects, even though today I'll primarily talk about the examination of the cryptocurrency pump and dump system. But I kind of started working on this kind of stuff, as well as cybersecurity, and Frank and I talked about that earlier. I mean, just several years ago, and and part of it is like our world has not, our academic world is kind of, like as Frank said, we're kind of, it's hard to sometimes be a little bit ahead of what the curve is interested in. So, but hopefully the curve will become more interested in this stuff. So without further ado, I'm going to share the screen, but I mean, I'm going to let people jump in, and sometimes I'm going to take the screen down just because I'd rather see you guys. I can't see all of you, unfortunately, when I have this thing up. So I'll just go back to the front and we can start. But remember, just interrupt anytime and just, feel free to jump in. I mean, I know you guys will. Okay, so this is joint work with several people. Tyler Moore is my long-term co-author. We have a National Science Foundation / Binational Science Foundation Israel-US grant. Marie Vasic is a professor who was at the University of New Mexico and is now at University College. She's also a computer scientist. The other people are our A's, and especially Farhang Ruhi, who I'll tell you guys a little bit about, who is this amazing A, made this paper possible in the sense that he was able to collect these data, which are virtually impossible to collect. Okay, so again, as I said, this is a long-term research project, and we're looking a little bit into digital crime. I mean, my feeling is if people are committing crimes on the internet in the public spaces of like Discord and Telegram, well, we can just take a look. I mean, we're not the police, but we don't have any idea who anyone is, but it's, this allows us to study some important phenomena. And our first paper in this genre was actually published in the Journal of Monetary Economics. It showed that the price manipulation of a single agent led to a huge rise in Bitcoin's price in 2013. That was the first bubble. This paper will deal with the second bubble, which was in 2017. The great part about that data, those data that we got, those data were leaked to the internet. So in that case, we actually knew the account number of the trader. I mean, we didn't know who that trader was, but we knew the account number. And I'll tell you a little bit about that later as we go on. But this was a case where there were 18 million data observations that were leaked to the internet when Mt. Gox, which was this exchange, this cryptocurrency exchange, collapsed. And so it was just very lucky for us to get it. It was also very lucky that I had computer scientists who could figure out which of the, we had 4 million duplications. Don't ask me how they figured that out, but they sorted that kind of stuff out. Anyway, as all of you guys probably know, you're all in the digital world. I mean, cryptocurrencies are still somewhat of a niche market, but they did reach valuations of 800 billion at the end of December 2017, which was the peak. And even though there was a huge fall off, prices are rising again. It's a crazy ecosystem, lots of coins, many exchanges, digital wallets. I mean, very few people have studied this ecosystem in any kind of detail. And it's kind of a little bit too bad, and a lot of data are available. In this paper, our goal was primarily to document the ecosystem, the cryptocurrency pump and dump ecosystem that basically came into being at the end of 2017 when cryptocurrencies really sort of were on the map as being, these hot investments in digital technology. And but we also do some things related to economic theory as well with these data. One thing that made all of this possible, these pump and dump schemes, by the way, there's pump and dumps probably going on all the time in penny stocks. I guess many of you saw that movie, right? What's it called? Werewolf on Wall Street or something like that. That's one person who was caught. But for those of you who don't know what a pump and dump scheme is, the idea is that you first buy a little bit yourself, and then you encourage other people to buy. That broker in that True episode that was on Wall Street basically was a broker who bought penny stocks and then called all those clients and told them to buy them as well. And then when they bought them, he sold it. So that's the way these kind of things run. And there's very little cost to running them in the digital world if you run it through Discord and Telegram. And they have a lot of users, like 350 million. I don't know if you guys are familiar with, probably most of you are, since this is a digital thing, but if you're not, just think about WhatsApp. I'm sure everyone knows what WhatsApp is, on a huge scale. So basically you can do anything in these technologies. There's virtually no regulation. We looked at the January to June 2018 period, in part because it's the most interesting period, and in part because we were never allowed back into any of these channels or groups after collecting all these data. So, but we did manage to document around 3,000 of these schemes during that period. And other people have written on cryptocurrencies, but they were kind of case studies. And we think we found most of them. Of course, since these are kind of illegal activities, nobody's really collecting databases. Anyway, so I'm going to talk a little bit about this system, but like I said, I'm happy you guys to interrupt any time. And so if you want to interrupt now or say something now, feel free.
Yes, a question around which cryptocurrencies allow pump and dump schemes more than others. For some of these projects, you just create your own cryptocurrency and you're done. But many of the ventures linked to Ethereum or other bigger currencies. And so is there some better monitoring of certain cryptocurrencies compared to others?
Well, first of all, almost none of the cryptocurrency owners want to have their cryptocurrency pumped, because we'll see actually when cryptocurrencies get pumped, it's true the price goes up, but then it dives at the end. And so the pumpers are not typically the people who are invested in the currency. And in the more successful currencies that have a much larger trading volume, it's much harder to pump. I mean, it's hard to pump, Bitcoin or Ethereum, and most of the pumps don't take place with these coins. A lot of the pumps take place, as you'll see, with obscure coins, ones that have low volume. So, and a couple people who actually own coins and saw this happen, their coin was pumped and then it crashed afterwards. They complained, I don't know who they complained to, because there's no regulators to talk to, but they weren't happy about it.
Yeah. So is an implication here going to be, were it regulated, it might actually do better?
The pump might do better,
No,
or
the cryptocurrencies are some of the ICOs.
well, they not only might they do better, but you might, I mean, you might be able to get rid of this,
The
because
volatility that comes from this. Yeah.
right, exactly, and yeah, and I mean, so you can view this, by the way, as a sort of a natural experiment where there's virtually no regulation. What would the financial world look like if there was no regulation and it was easy to do this kind of stuff? We'll talk a little bit about regulation at the end, and you'll see that a little regulation goes a long way in terms of, we think, in terms of affecting this. Okay, so, but keep talking. I mean, I'm happy to, like I said, just take your questions right now. And
You didn't do this for the regulatory implications, though, right? That wasn't
not at all, not at all.
not
And
to
to tell you the truth, most of the regulators aren't interested in it. In the US, the problem is cryptocurrencies could be currency, they could be a commodity, or they could be a stock. So then you have 3 or 4 different agencies who claim regulatory authority, and sometimes that creates a vacuum in terms of it. And of course, it's dispersed all over the world, and then there's also the sense that wow, this is a new ecosystem. Do we really want to put heavy regulation into it and and sort of dampen down the incentives? So it's not really clear. Actually, to tell you the truth, it is kind of clear what regulators can do, and I'll show you that a little bit near the end. Something very simple, which is not heavy at all. Okay, heavy-handed at all. Okay, so no, but go on if you guys have more questions.
Well, I have one more question, which is it's my impression that many of these people, the applied theory and sort of generic academic study of cryptocurrency is overly sanguine about this kind of activity. It doesn't. It's that the benefit of being, as you're doing here, very oriented towards the phenomenon, is that this stuff doesn't enter into the models people have for ICOs and cryptocurrencies and so on.
No, not at all.
Not at all, right? It's
It's almost as if there's a disconnect between the models and what's really going on.
And what you're seeing. Yeah, that's my impression also, that the models are too overly optimistic.
I think so too, and we don't have much of them. We don't have a model at all, except a prediction of what might happen with these pump and dump schemes over time. Anyway, here's a pump. Okay, this is an example of a group, one group called the Big Pump Signal. So they're obviously not trying to hide this. That this is what the group does, and about 10% of the pumps actually are very brazen about this. The other 90% are a little bit careful. They probably realize they're doing something illegal or not so legal, and so they're kind of keeping it under wraps. But this particular group and many other groups are not doing this. This group had about 77,000 members when we were involved with it. I mean, when we were in the group, we didn't do anything. We weren't involved in the pump and dump scheme. And you can see that they announce when the next pump is going to be, and they also announce it for different time zones, which is helpful, especially Koreans put a lot of money into cryptocurrency. So they're often, when you mention pump times, they're often included. And then the countdown, the next big pump is in 30 minutes. And they give you some advice, But the one thing here, is if you're late in the market, do not buy. Well, there's a good reason because of that, because if you're in late, I mean, sometimes these things go up and down really quickly. So you might actually lose. And we sometimes we analyzed all the chat, and sometimes you'll see in the chat that people complain bitterly that they lost money, people who were involved in the pump. Not surprising, right? I mean, we'll think about that a little more later. Anyway, that as we get closer to the pump, then we finally find out what coin is being pumped, okay? And you're going to get the 3-digit symbol, like BTC is Bitcoin. Well, this coin is called Bankum, which is like a coin that nobody's ever heard of. It has a symbol BNT. So finally, we're revealed what it is. Sometimes the exchange that it's going to be pumped on will be revealed. In many cases, these kind of coins are only traded on one exchange, one or two. So you don't really have to worry about telling people exchanges. But you can see here that they're trying to push the price up quite a bit. And then you can sort of see what happened, okay, these are the kind of data that so the data about the pump itself, I'll tell you how to capture it, but the kind of data that we get from the market is from coinmarketcap.com, which collects all these data. So we matched all of our pumps to CoinMarketCap data. And first, I'll tell you how we did all this kind of stuff. But this is just showing you that at a certain time, and I'm not going to say whether this was whether the pump started before the signal or not, because sometimes it does, as you might expect. But anyway, this just shows the price over time of this particular coin. The yellow line is the price in Bitcoin. The greenish blue line is the price in US dollars. The gray bars at the bottom are the volume. So you can see that there's a huge increase in volume for a certain period of time, and then it goes back down. So this one went up and down, quite quickly. Although this is not delineated by the minute. You can see that these are. I mean, this all probably went on in a 20-minute period. So that's what a particular pump looks like. And just the kind of stuff we're looking at. Does everyone? And the bottom thing, the bottom line just shows the market cap of this particular cryptocurrency, which of course is the price times how many coins there are.
So Neil, the question this is naturally going to generate is, okay, so after a successful pump and dump, it's easy to observe an out of characteristic peak. So after the fact, it's easy to see the successful ones. How about the attempts that don't succeed?
Well, we do kind of follow every single one that we could find. So there are some that are not that successful. Okay?
Oh,
so we include everything. This is not the way we collect our data. We collect our data by going into the groups. Okay, we go into the groups.
I see. Okay.
And then once we've confirmed that it's going to be a pump, this one was clear that it was going to be a pump, right? Because they said it. Okay, but a lot of the groups don't exactly say that. They speak in sort of using strange terms. So we had to kind of run through a lot of language analysis to get a sense of what was being said. And sometimes we came to the conclusion that this was not a pump, just providing some information. So we look at all pumps, the ones that were successful. And one of the things is we want to see what pumps were successful and whether pumps continued to be successful over time. That's an important question for us.
So my question then is the reverse of what Shane just asked. So how many sort of peaks like the one you're showing in this plot do you see that you cannot attribute to any pump and dump announcement?
Okay, we don't have the answer to that. That's a good question. That's a really good question. We probably should do that. So I'm going to, as you make good comments, I mean, everyone made good comments, of course, but this is something that we should do. Maybe, Kiara, you'll send me that. You'll send me like a note about that a little bit later, because that's a good point. What we do, by the way, is we are looking for peaks around the signal. We're not restricting ourselves to the exact time at which this takes place, but still, this doesn't relate to your question, because you're saying, okay, I want to see, are there other things that went on that, that look like this, but you guys didn't find that, that nothing is impossible with these computer scientists. So despite the reams and reams of data you would have to go through, I think we can do this. So stay tuned. Maybe we'll have more later. So that's a great point.
Neil, related to that, I have kind of a question.
Yeah, Frank.
I'm more familiar with the pump and dumps in the old days for the penny stocks, and they would be a bit more prolonged, right? So it's interesting to see that the spike in market cap is very small, but the spike in volume, looks like it's over 24 hours or something like that, right? So is that characteristic? Should we be thinking that that's kind of the norm in what you're seeing, or is this one a bit more of an aberration where the spike may be slower to grow over time, and it's only because this one is specifically advertising that it's going to happen at this time?
This is actually a little bit misleading on the volume. This isn't the volume at any point in time. This is the volume over the 24-hour period exactly preceding each minute.
Oh, so it's like a running average.
It's like a running average, exactly. And this is something that CoinMarketCap unfortunately does not collect. They do not collect volume data at any given point in time. Okay. So that's a little bit, deceiving. It probably meant that there was a lot of volume around the time, and then, because you're collecting the 24-hour stuff, it doesn't go away until till you're quite a bit down the road.
Understood.
You're actually 24 hours away. So it was probably just a small time period in which the volume was high.
Gotcha.
Probably actually not good to put this in. I mean, we were just taking their data. But one, just to give you a sense of about 10%, a little bit more, are this particular pump that belongs to a group which they're brazen and they're not trying to hide anything. They were basically 12% of the ones we found. So it was a little bit harder to find the other ones because they didn't use the word pump and dump, and I'll tell you a little bit how we got into all of those. And sometimes we couldn't even get into the signal, but we knew from other sources that on social media that there were some pumps. So sometimes you could find them copied onto Twitter or things like that. So that's why we have like 40% of ours are copied pumps. They occurred on Discord, but we couldn't get into the original stuff, but we were later able to get it from another source. So it was really a big data effort. Before I get into some of the data efforts and everything, though, this is the only theory we're going to have. Okay, so, and the idea is basically that, you would not think that this kind of pump and dump could last over time for a couple reasons. First of all, there are, let's call them honest traders in cryptocurrencies. They're traders who, they're investing, they're speculative or whatever, but they're not stupid. They're not going to be fooled more than once or more than twice. And I gave this talk recently to a consulting firm in New York, and one of the people working there said, "Yeah, we actually kind of wanted to take advantage of these pump and dumps, and we kind of were able to forecast when they were going on, at least in certain currencies, and we wanted to short these coins. Well, you can't really short them, okay, but they developed an interesting trading strategy to sort of simulate a short. So there are sophisticated traders going on in this world, and you can't imagine that you could fool them over and over. And then, of course, the other thing, think about how these pumps actually work. There's some insiders who run the pump and dumps. A lot of times the insiders bought before the signal. Okay, I'll show you actually an instance of that. And that kind of will, make it a little bit less fun for your followers since they get ripped off. Okay, so you can imagine that people would be less and less inclined to participate over time, even though these groups are trying to always draw on new people. And finally, you might think that regulators would begin to react if this becomes prolific. The Wall Street Journal started writing about this, and there was a little bit of regular action. So the idea is that you might expect that these things would be less successful over time. That's the whole theory here.
And didn't the Korean government react to a bunch of this stuff at one?
They did and they didn't. I think the most aggressive regulatory action really wasn't anything at all. It was the Commodity Futures Trading Commission, which is a really small U.S. agency, put out a bounty for on this. So if you if you provided information that led to the arrest and prosecution and conviction of somebody involved in this, we're going to pay you quite a bit.
So the one other thing I would say about your theory at that level of theory, Neil, is another prediction you would make, which surely has not come to pass, is that were these pump and dump schemes to give the entire area a bad reputation and name, you would see decreasing entry of new coins over time and reduction of investment by others because they'd have absolutely safer, more reliable investments elsewhere, and that has not come to pass. Right? It's not. You do
no. But but you also have to ask yourself, like, who's involved in these cryptocurrencies as well. I mean,
Yeah.
you know, a lot of the use in Bitcoin itself is for illegal activities like ransomware, where you shut down people's computer and get paid in Bitcoin,
Right.
or people acquiring illegal goods on the internet and things like that. And a lot of the other, I would say a lot of the other investment is really pure speculation. We don't see too many services being provided yet, even though there's hope. I know one group, after we wrote the previous paper, I was contacted by many of these groups trying to develop products and trying to develop their own blockchain. And this one particular one that we, you know, worked with a little bit just to try to understand what they were doing and their theory. You know, they really believe they can change the world. So I think you still have that effect. You know, you still have people who really believe this is the right model, and most of the people who are developing products that they really care about don't want to see their price rise a lot anyway, even without a pump and dump. You know, they're not interested in that. Interested in, because if the ecosystem, I mean, if the price is not stable, then it's, you know, then you're going to have then that leads to problems as well.
Yeah.
So that's an excellent point. Okay, here's an example, by the way, of a pump and dump that happened before the actual signal occurred. So you can see here that the red is when it was supposed to occur, but the black is the price. Okay, and you can see that it took place, you know, before. I mean, it just the insiders bought before the signal. So if you were unfortunate enough and you got in at this point, you know, then you're gonna lose for sure. You know, the price has already been pumped up, and then it's just sorry about that. It's just a downward trend from there. You know, you can see the volume picking up already at this point, well before, again, because we're looking at, this is a 24-hour period, you can see that these guys, you know, they just bought early. And so if you don't have sophisticated followers, I mean, they can often be taken for a ride. And this is an example of it. By the way, some of the pumps actually occurred exactly when they said they were going to occur. Okay, you would think if you want to build this, you know, a cohesive group and trust and things like that, and you're going to do this over time, then you would try to do it that way. In any case, just in case we don't get to the end, which probably we will do, but maybe we won't, who knows? Because I mean, I like that we're having all this discussion. But the main finding here is that success did decline over time. Now, how do we measure success? Since we don't have volume, I can't talk about profits. But I can talk about the success in the sense was how much did the price rise above the price before the pump began in terms of percentages. So that's what we're measuring in terms of success of the pump and dump. It doesn't mean that it was super duper profitable. I mean, it just gives you a sense of how much they were able to manipulate the price. And you can see that over time on Telegram, which had more pumps than Discord, you can see that the median success went down over time, sort of it looks like pretty much in a monotonic way, and not exactly, but in Discord it went down by even more. Okay, so you see this over time, and this is one of our main results, and we'll see actually when we get to the regressions that when you control for every other thing that you think might affect the pump and dump, you don't get rid of this. Okay, this declining success rate is something that is just we find it in the regressions as well. Now there is something interesting about it though. There were these transparent pumps. Remember I told you about the sophisticated groups? Actually, there was no change in their profitability over time. Now they're a much smaller sample, but basically their profitability stayed the same over time. While the other ones, which you might say, okay, so they're less professional. And you'll see also that they kind of pump the same coin over time. The less professional pumps actually got pounded. So maybe there's a reason that these groups are so brazen. They're not worried about regulation, and they want to just make sure that, from a pump and dump standpoint, they're running things like a professional organization. But so their profitability doesn't decline, but they're a small number.
Neil,
any thoughts?
Yes, yeah, I have a thought. Isn't this surprising in a sense? Because if it's so easy to find this scheme by searching for words pump and dump, you would assume that it's much easier to find this strategy beforehand and not be fooled by it.
So you mean the fact that in the sophisticated pumps there was no decline? That part.
I'm surprised. I am surprised because I would have thought that not just a regulator, but even other investors would not be fooled by a strategy that was so transparently described online that you can almost search for by searching for the words pump and dump.
I know. Yeah, I agree with you. I mean, I don't want to put a lot of faith in this finding. I would just say this is kind of but still, there are a lot of, there's this old saying that a fool is born every second or something like that. There's a lot of people putting their money into this stuff who are just, lack sophistication. And so maybe a lot of people will not be drawn into them, but nevertheless, and maybe to some extent, we don't even know this, maybe they're taking advantage of the insiders in their own group. That may be the ones who are on the margin. That group had 77,000 members. So maybe you've an inner core, but we don't know, Chiara. We really don't know. Of course, nobody wanted to talk to us about this stuff, and we didn't really try too hard to get them to talk. But you can imagine that nobody wanted to talk to us.
Yep.
That's a good point too.
Those two findings are interesting. I was kind of expecting a third one, and maybe you know the answer. Or a pump and dump starts from an existing level. You could take it a day or two earlier. You could time it in some way, and then after it's over, again, you have to define that in some precise way. You can see whether the level of the currency is higher or lower than it was prior to the pump and dump.
And we actually, that is a finding too. And guess what
I would have guessed most of the time it's lower.
The median price is 40% lower.
So that seems like a finding because if I'm not mistaken, a little basic theory would tell you that the risk return is not just the simple risk return on the assets moved in a bad direction, right? Because and so you would expect the price to be lower after one of these, and so that if the finding is consistent with that, that's interesting. It
is. It's very consistent. The median change. Looking at from like the beginning price, before the pump, the price after it was all over divided by, minus the price it started at divided by that, it's a 40% drop. So it's pretty remarkable. It's pretty it's almost like painting the asset. Okay, well, you're right. You foreshadowed one of the findings, and that is a finding as well.
Okay. I think that's a major finding. That's a good.
Okay, well, this is the reason I'm talking to you guys. We have to learn how to present it. As I told, maybe I don't know who I told, but we went 3 rounds on with a financial journal on this, and then afterwards they decided that I don't know. Sometimes this happens that they didn't want to take it. So and the frustrating thing was, in this case, I don't know. Probably Frank knows him, but maybe others of you don't know. But Bruce Sneer, who's like the guru of cybersecurity, said this was really a good paper. So, but we couldn't convince the editors of that, and maybe in part because we didn't push this finding that hard, Shane. Okay, so there you go. We will do it going forward. Okay, so I'll go back to the screen, and it will take me back to the start of the presentation. I don't know why, but that doesn't matter. Okay, we did have some other findings, which I would agree with you, Shane, that we should do this, but we did we should put this as a major finding. It turns out that the two very popular exchanges were also popular for pump and dumps. They were warned at some time not to, they were warned to try to stop these pump and dumps. Binance was probably used simply because it was a large currency exchange. But the pumps actually on these two exchanges did not do that well. They did better when they used the other exchanges which weren't so popular. Another finding is that you might think that there were tons and tons of channels running these pumps, but it turns out that 3 channels accounted for 45% of the pumps on Telegram. So you have, and these were, by the way, these were typically the ones that did less well over time. And again, some of the coins were pumped over and over again. So, if you're a regulator and thinking of getting involved, and it's not that you have to keep track, or like you said, even Kiara, if you're a sophisticated trader, you don't have to, if you really pay attention to this. But of course, nobody collected the data like we did. How could anyone know that 3 channels were involved? You would really have to systematically go through it. So I think this is a finding that, that there were some channels where they just accounted for a ton of it. And if the regulators had this information, and we did give it to them, we didn't personally give it to them, but in our previous paper about price manipulation in the Bitcoin ecosystem in 2013, they actually discussed our paper, the SEC discussed our paper, and they said we should keep them abreast. And so we actually did keep them abreast of this. And we also tried to contract the CFTC as well, but we didn't make any inroads here. But, this kind of information I think is useful for regulators, the systematic putting together the information. Okay, just other key findings. I do want to get into talking about how we collected the data because it's kind of fun. As you might have expected, if you pumped less popular coins, on average, you did better. When you tried to pump the really popular coins, you didn't do as well. That makes sense, if the coin was traded on fewer exchanges, you did well. You did better, because you could probably control the volume a little bit as well. But in the regressions, when we put in everything else, as well as these factors, you still had probability declining over time in the way we showed. Okay, so now to the data, which is something fun, but again, jump in any time. So the most interesting part is just how did we, although I can't even put me in the we, how did we get into these groups and collect all these data? Okay, so this is where Farhang Ruhi, who was our research assistant, who was someone who managed to leave Iran somehow by, I think, climbing over mountains, without any documents, and getting to the U.S. and getting into a BA program and finishing the BA in about 1.5 years. Okay, he was our main RA here, and I guess if you can get yourself out of a country like that without going through border checks, then getting into these kind of groups is no problem. And so, but the way we started was on the internet, there's a group for everything. There was something in Bitcoin Talk where there was a thread. Okay, so this is related to what Kiara said as well, about all known pump and dump groups in Discord with more than 100,000 members. Okay, so this is information. We found out about it, and then we just let Farhang get into these groups. And when he got into the groups, he downloaded all the chat, so we could see all the communications. Going back to whenever they, kept the communications, which usually was for most of the time. Okay, so he got into these things, and then we, but that didn't give us that many groups. And then we found an Android app as well that trapped the popularity of PMD groups. Like Kiara was saying, okay, why doesn't, but you have to look for this stuff. You really look for this stuff. And then what we tried to do was we tried to, whenever you were in one channel, you might find information about another channel. So this was kind of, I don't know how you describe this effect, but we bounced around. We took any piece of information and we followed it up. Okay. We had the RAs working like crazy over a 6-month period on this.
Yeah. So can I ask a really sort of funny question here? All of this in English?
Virtually all of it. Yeah. Virtually all of it's in English.
Or all your data comes from the English version of this. There may be a Russian version of this that you have, or a North Korean version of this.
Right.
So, apparently Persian, you'd be able to, given your RA, you would have been able.
We'd be able to sort it out. I mean, I don't think there would be a Korean version of this because the South Koreans are heavily into this, into this. As you saw in one of our pumps, they actually put the time in Korea. But you're right. There might be pumps in Russian, and those we certainly didn't find. That's a good point. I would guess that most of the rest of the world is pumping in English, but I could be wrong. And but that's a good point. We have no idea.
So, and then further, maybe you're going to get to this. Do you know anything about the composition of these groups? And again,
nothing at all. So unlike the hackers that we were able to talk to who worked for these, solving bug bounty problems, we were not able to really, and we didn't try that hard to find someone who really wanted to talk about it. I mean, you could guess that the group had a few inside people and, then had a lot of followers, and they, groups of 77,000, obviously 77,000 people are not participating in the pump and dump, but it's hard. It would be very, very interesting to study the organizational structure. If anyone is able to do that, that'll be amazing.
And I mean, the one trick I've ever used in this, I don't do a lot of international stuff, but is, using the IP addresses, you can trace back to country of origin because of the way IP addresses are allocated. But you didn't have that option open to you here? Well,
the thing is that people often use VPN, so they can.
So they hide their.
They hide where they are. It's possible. I mean, some computer science researchers have shown that if you really try hard and investigate a lot of resources in finding a single address, you can find it. But but we were looking at hundreds and thousands and things like that of addresses, so you're not going to do that kind of stuff.
Yeah.
We managed to get into most. Farhang did manage to get in most channels with an invitation. These groups aren't that selective probably, but sometimes he got into it without an invitation. I actually don't know what that means. But he said that he was able to get into some groups without getting invited.
Well, so maybe that's a last piece of descriptive data related to using VPNs. How much of this is the dark web, and how much of this is the searchable web?
All of this is it's not the dark web at all. This is all Discord and Telegram.
So, so in principle, there could be additional things going on in the dark web that you wouldn't know about.
We wouldn't know about them for sure. Yeah, we were not at all in the dark web. We were in these very popular servers, and sometimes the information was rebroadcast into other media. And since we know what we were looking for, things because they had been referred to in other channels. So we just search the other media as well. This was basically something that it was just.
Wow.
An incredible amount of work to process all of this. And like I told you, like 90% of the groups talked in very obscure terms. So you had to learn sort of a new language too.
No, it's very impressive. I just bet there's a lot more behind.
I'm sure. We might even be just hitting the tip of the iceberg. But if we are, the other people who've written about this, and I'm not criticizing anyone, wrote a case study about 8 to 10 or 15 to 20 or 50. We've documented that there's a lot of them just right out there and you hit it right, Shane. It's it's not on the dark web.
Wow. Okay. Wow.
Neil, a comment and a question. The comment is actually all this information that you're telling us, like how difficult it is to get this information, even if it's out there, is very helpful in, limiting the doubts that I had about, how can you not be able to prevent this? The question is more related to what you were describing before. I wonder whether you can say a little bit more about the relationship of these groups to the owners of the cryptocurrencies. I don't know whether they're called owners of the cryptocurrencies, because if they are not related, as you said, then you almost have this exogenous shock to the cryptocurrency, and you can see sort of long-term whether there's any effects to the lifespan of the cryptocurrency. Instead, if they are related to the owners, it would be very interesting to understand why are they doing this pump and dump because the companies are sort of there's some inside information about the fact that that cryptocurrency is a lost cause or something else.
I don't know for sure, but the little bit that we found about this suggests that there's really no connection in that. And like we said, in many cases, it basically killed the coin. So if the owners were interested in long-term doing something, it was very destructive for the coin itself.
But is it causal or is it just correlated in the sense that like the coin would have been killed anyway, and so the owner sort of wanted to get some
I think a lot of the own, by the way, I think it's probably it's not that, because I think in general the owners made an incredible amount of money when they came out with their initial coin offering. This is when the coins really went through the roof. Okay, so these are not the pump and dumps didn't occur at this time, obviously, because nobody knew about these coins. That's where the owners of these coins made big time fortunes. And that's a good point, though. We can document that, Kiara, because there's other papers who have written about this as well. So we can. That's another point that we should. But you're going to send me. You're going to send me a good file, right? With some. You're writing down your comments.
I am trying to write down something.
Okay, that would be. I appreciate that very much. Okay. So anything else? I can go back to the screen. Okay. So. Okay. Let's put it back in this format. I don't know why it always goes back to beginning. That's just the way it does here. Okay. I mean, I won't go through this in too much detail because I guess we talked about this. I want to talk about, I mean, there was a lot of data which you had to do text analysis and you look for keywords and duplicates were removed. These guys are great at removing duplicates. In another project, there were 18 million observations, but it turned out 4 million were duplicates. So the rigor and the care that they put into this is amazing. So I would highly recommend, if anyone wants to do projects in this realm, to work with computer scientists, because we have ideas, they have ideas too as well. But there's a whole new field now that you would call computational social science. They're really good at this kind of stuff, although they don't have the foundations that we do in terms of maybe thinking about the sort of the economic insight behind it. So this has been a good team in that we brought a lot of complementarities together. This is just one thing I wanted to show you, playing detective on another paper that we wrote. This was when we were able to identify the suspicious traders. Again, this was not me. This was not Farhang this time. It was one of the other RAs on this project, James Hamrick. And this is when we had some suspicions about suspicious traders in the Bitcoin ecosystem. Now, from just looking at these data, you can't tell that this might be suspicious. But what we found out is that in the case of Mt. Gox, there was never an ID number above 650000. So this is a fraudulent ID number. This 698630. It's a fraudulent ID number. So this is something that we were able to learn, and therefore we were able to identify this this suspicious trader, which, by the way, turned out to be in this case, Kiara, it turned out to be the owner of Mt. Gox. Okay, and although that was an interesting story in itself, because while we were doing the revision, they asked us to speculate on who we thought was behind these trades. Well, we had some idea, but we didn't really want to. We're not the police or something like that. But fortunately, during the revision, there was a trial going on in which the owner of Mt. Gox admitted to actually making these trades, but to saying that there was nothing wrong with them. They were perfectly legal. So that was really pretty amazing for us, and so therefore we didn't have to come up with our own hypothesis. In any case, these are this is just the kind of stuff when you really, really carefully look at the data, you can find out a lot of things. In any case, so we ended up with more than 3,000 of these. Most of them were on Telegram. It's a little bigger media than Discord. So we and there's lots of currencies exchanges, and the data is reported by CoinMarketCap in 5-minute intervals. So we don't have price every second. We have price every 5 minutes. So it's not perfect in that sense, but that's what we do have, is that they just have prices every 5 minutes. But these things typically went on for more than 5 minutes. I mean, like they usually went on for a good hour or two. So, but still, we might have missed something. I mean, because we don't have prices every second. Even though thinking about this, another project I'm working on now, although we did get now high frequency trading data in cryptocurrencies, which we do have every single trade, but it's not on these type of currencies. It's only Bitcoin versus US dollar, and people weren't trying to pump Bitcoin. So never mind, that thought is, forget about that thought. Okay, so like I said, the pump indicator and the signals don't always correspond. So we define the pump timing as the biggest 5-minute increase, okay? So that's being a little bit generous to the pump, but like in this 48-hour window. But in general, most of the pumps occurred within an hour or two of when they said that they would occur. These kind of things I showed to you, and we talked about them, so I won't go through them too much. I'll just talk a little bit about what variables we put into our regression. Like the dependent variable was the percentage increase in the price. We included the number of exchanges in which the coin was traded. We included the rank, the number of pairs the coin was traded on, how many server members there were. In Discord, it's servers, and how many views. In Telegram, it's channels, so you have views. We put in dummy variables for the time, and we put in dummy variables for the exchanges. And we just, well, this is not too interesting, but you can see that a lot of the pumps occurred on, they didn't specify the exchange. Okay, about 50% of the pumps did not specify where it was taking place, but oftentimes these coins were only traded 1 or 2 places. This we talked about a little bit already. That basically that, it was all this stuff is risky, but it was less risky to pump coins that had much more volume. And remember, this is the maximum price that it went up. So a lot of people probably still lost on some of these pumps in which the median return was quite high.
So can I ask you a little bit about the timing?
Sure.
Is the timing with respect to North America, or is it with respect to Asia? Because those won't be the same. Middle of the night and middle of the day aren't the same in either continent. So I'm curious whether the pumps are aimed primarily at English speakers or Chinese speakers or Russian speakers, or
that's a good question, Shane, and I think we can answer that as well. If you go back to the first pump, and I won't take this all the way back to the slides, but the first pump took place at 7 o'clock in the evening London time, which was 2 New York time, which is 4 in the morning Korean time.
Right. Yeah. So that suggests North American or European focus.
That's a great idea, though, to go back and look at that. Okay, thank you. That's a good idea to look at that. We did not put that in. Okay, great. That's a good idea. Wow, that's okay, great. So the regression results are, they're. I mean, I don't even know if you guys can see this, but you can see if it's exchanged, if the coin is exchanged on many exchanges, then the pumps don't do as well. If it has a higher rank, which means it's a more obscure coin, they do better. And then you can see the 2 arrows in the bottom that the success still falls over time. Okay, you can see the dummy variables for February, March, April, May, and June. We obviously don't have January because that's the base. You can see for Discord, once you control for things, it still falls by like 60% at the end. Telegram falls by a little bit less. I mean, in the raw data, you see it falling by 50%, but by the end of May, in May, the pumps were 43% less successful, and in June, they were 26% less successful. The bottom line is that there still is a decline. So even when you do all this control, there is a decline. So we talked about a little bit about this as well, that these pumps that were more sophisticated did better. I do want to get in a little bit into some of the other stuff we found, though, and one of the things is what Shane mentioned. What happened to the coin after the pump? Okay, so you can see that it was really pretty much a disaster for these coins that got pumped. The median price was 40% lower, and 60% of the coins had a lower post-pump price than the pre-pump price. So certainly, you would guess over time that it's that everyone can kind of see what's going on, and you would think that it would keep this from happening as much as it did.
Okay, so let's talk like an economist for a minute. That's a negative externality in the ecosystem. But a negative externality in the ecosystem on one asset can potentially be a positive one on another asset. So, you would know much better than me if there's a sort of degrees of substitution across these coins. But if there were, I'm thinking like if products were for sale and a particular Ford truck loses value, then the closest substitute in the market then raises in value because, and so on. So if these little coins have their values declining, you might have thought you would observe an increase in value in the other coins, which are the closest substitutes. That is,
I think that makes sense theoretically, but you have to remember, Shane, that there's like 2,000 of these, and most of the ones being pumped are obscure. So I don't think there's much of a substitution.
It's too thick and too liquid to be able to.
Yes, I think so.
Okay.
Neil, I was going to ask, so if I recall correctly, the pump and dump on penny stocks saw kind of a similar pattern where they ended up lower than where they started, and I'm just curious, do you have any sense of just comparisons to the penny stock stuff? Are the patterns that you're seeing overall, are they generally similar? Is there something different here? I'm just curious.
That's interesting. I mean, I didn't know that there was much data about the pump and dumps beyond that one case.
So there was in like it was a while, as we were talking earlier, like there's some stuff, some older stuff in like maybe the mid-aughts that was Tyler might actually be familiar with it because he was involved in that world back in that time, and so anyways, there are some papers looking at pump and dump penny stocks.
Okay, that's interesting. We definitely should do that. Absolutely.
Just because it'd be interesting if they're different, then why, right? Because obviously these are penny stocks are different than cryptocurrencies in a variety of ways, and so it'd be interesting just to consider what the difference.
But they might be similar in some ways as well. So that makes sense. Yeah, that's a good point. Thanks, Frank.
I also had a question related to Shane's question, but focusing on something a little bit different. So you said that overall, if I got the numbers on your slide right, the cryptocurrencies in question went down by about 40% as a result of these pump and dumps. But you said only about 60% of them actually got worse, which means almost half of them didn't get worse and may have even gotten better. Any observations about that heterogeneity, why some of them suffered and a significant number of others did?
That's also an excellent point. We should do that as well. We didn't do it. You're right. That's like some maybe definite. That's a definite of something we have to do.
Could be something interesting there.
Yeah, that's a great point. Thanks, Adam. That's an excellent point.
Yeah, and apologies for joining the seminar late.
That's okay. I mean, you made a great point. So you're.
I've run the same regression that you just ran, right? Just use the same exogenous variables.
Yeah, you could do the same thing.
Yeah.
Well, the ideas are really flowing here. So who said you couldn't get good ideas in a digital setting? So I guess it's because you guys all have a digital background. So great. I'll just flip back to the screen for 1 second because and then we can keep talking, but there's one cute slide to show that, let's see how we get to it. Okay, this one I really like. What? That one? I like this slide a lot. Because, you can actually search on using, Google Trends, you can actually search for, the term pump and dump cryptocurrency. And look what you see. You see a peak, in January 2018, and then you see it dropping off. Okay. It's something interesting. And I can't say that it means these things are less profitable or that there are less of them going on, but there's something behind the Google Trends things. And I also have to tell you something else that's really interesting is we looked at CFTC, which was that obscure regulatory agency in the US, and we wanted to see what it looked like in Google Trends. It basically is like zero, except like it pops up like crazy around February 2018, which is when they make that statement, okay? And then it goes back down. So this was my idea that regulators could have some kind of effect just by making the state. By the way, the SEC, nothing changed in the SEC's Google Trends. We should probably put these things here, but the SEC trend, nothing changed in Google Trends over the whole period. CFTC, when they make that announcement, it goes through the roof. Interest in them, and then it dies off pretty quickly as well. So this is my idea that regulators can make a lot of, maybe can make a lot of progress just with a little bit of, playing the digital game as well, like putting out a bounty in the digital world and, with warnings and flashing, websites and things like that. So I thought that was interesting too. We'll do better about tying that in. Okay, so I guess I said this stuff. About the CFTC thing was very, very interesting. Certainly the conditions exist to do these things. Maybe the regulators aren't so concerned because theory kind of says that as the traders become more sophisticated over time and the volumes get larger, it's not going to be so easy to do this. And maybe just by making a few statements, they do as well as they would by spending hours and hours. But in general, the regulators are not that interested in this topic. Okay, anyway, that's what I wanted to say. I'm happy to take more questions and just have more discussion with you guys. So I'm going to stop the slideshow here. Again, so far the comments have been great, and I really appreciate them.
I have a question about the overall cryptocurrency market, because as you said, I think 2017, 2018 was one of the big bubbles where a lot of these cryptocurrencies were overvalued. And I wonder whether you can separate that decrease in the success of the pump and dump schemes into a decrease that's probably due to the economics of the pump and dump schemes versus a decrease that's due to just an overall cooling of the cryptocurrency market.
We can do that for sure. I mean, the cooling occurred very, very quickly. The cooling occurred like at the beginning of 2018. The price fell off the charts. I mean, it peaked in December and then fell off the charts. But we should definitely do that. You'll still see that the effect holds up. But that's another thing definitely worth doing, Kiara. That's another good point. The price dropped like crazy very quickly from 17,000 on Bitcoin, or 19,000 back down to 6,000, and most of the really small currencies got pounded in the first 2 or 3 months after the peak. Okay, or actually not even the first, like in the first month. Okay, but that's another excellent point. Wow, there's so many excellent points. I mean, I hope Hope I remember the ones that you're not writing down.
Yeah, David, go ahead.
Yeah, Neil, just a quick question for you. This week I was talking with the CEO of Ripple, so I'm sure you know XRP. He says that they're fighting with the SEC now on whether they're going to be considered a currency or a security. And so the obvious question is, should cryptocurrencies broadly be considered securities, in which case this gets regulated in a way just like a traditional security does, or should it be considered a currency, in which case you can't actually regulate it the way you would regulate a security?
What I'm curious to know what they want, or did they tell you?
Oh yeah, no, they want to be a currency. For them, this is incredibly problematic for everything that they do. So they're even talking about whether they need to move out of the United States in order to continue to operate.
Okay, I wasn't aware of any of this. This is incredibly interesting. There have been a couple legal papers about sort of the overlapping regulation and perhaps what should be the outcome. But I think this is a wide open area in which academics could help a little bit, because there's no clear trend at all as to how this would go. It's very, very interesting that this is coming to a head right now. And yeah, because if it's a security, it's a much different regulation. Right. Ripple probably has the best claim of any to be a currency. I mean, compared to most of the other ones, I would think.
Yeah, I mean, the problem is that they have $12 billion of XRP on their balance sheet, which is why the SEC thinks of it as a security.
Okay.
While the usage case is like a currency, the way it is represented on the firm's assets makes it look an awful lot like a security.
Okay, interesting. Okay, so they're shooting themselves in the foot then by...
But that goes also back to Chiara's earlier question. Not Ripple per se, but a firm who held a lot of assets on and held a lot of its own currency would have an incentive to generate one of these schemes to sell off some of the assets they were holding. And so to the extent, I'm not saying Ripple would. In fact, Ripple's given their very stated intentions that this would be definitely not what they would do. But a little firm, who's holding an awful lot of assets might actually want to do this because then they can dump, a certain amount of it on somebody else, and then they themselves could have tens, hundreds of millions of dollars very easily that way. And that's the thing that motivates regulating them like the securities to make every transaction transparent and know every owner. And you can't see that now, right, Neil? Because
no, you can't.
Yeah.
Okay, that's really, really interesting point, David. I'll be interested to see how that works out.
So will they.
Yeah, I'm sure. Probably more than me.
Again, I'll just one other piece, just to give you a sense of why this is so problematic, is that they've been around for 7 or 8 years. They have early investors. The investors want liquidity. What's the obvious way to give liquidity? It is to dividend out the XRP to their early investors. That first sounds again like a security.
Yes.
So again, all these issues continue to get really complicated, and for XRP in particular, since volatility is their enemy, pump and dumps would be incredibly problematic to them.
Yes, it would. Although probably they're not getting pumped that much because they're such heavy volume.
Yeah, I mean they're generally number 3 after Bitcoin and Ethereum.
And Ethereum, I don't think that. I mean, from what I saw, I don't think there were almost any pumps on Ethereum.
Hi.
Okay, that's interesting.
Can I ask a question?
Sure.
So, this is Gizem from UVA, University of Virginia. So as I understand, and please correct me if I'm wrong, that you're using Telegram data to identify the pump and dump schemes, as well as you're using it as a variable, the views for these schemes as a variable in the regression. I was wondering whether you could actually use the communication patterns and the text, using more text mining and natural language processing to to find which of these, some signals about which of these pump and dump schemes will be more successful versus not. Because I'm saying this because I'm also on a project where we use Twitter data to actually get to this question. So how can you predict whether this kind of scheme will be successful or not? And we're using the cascades, information cascades on networks to be able to get to this question. So I wanted to get your insights about that.
Well, I mean, that's a great point. I mean, we did do text analysis in order to try to determine whether it was a pump or not, but we didn't take it the additional step like you guys did. So that seems like a ripe area. But I think we do still have all the I think we downloaded all the chats, so I think we have everything. So I'll be interested in seeing what you've written. So it would be really nice to see what you're doing.
So we're still figuring that out. That's why I wanted to get.
But you're doing this on pump. You're doing this in cryptocurrency pump and dump.
Yeah.
Great! Wow.
It's actually a project funded by DARPA, so they are really they're providing the data. Yeah. So it's a big project that they're supporting. Another question I had was the data.
Let me just ask you a question then about that. So so they're actually giving you all. They're getting into the data and giving you the data. They're downloading all the data from all the groups.
So DARPA programs work a bit slightly different. So they have different contractors that they work with. So they work with researchers as well as some people that they contract. They are responsible for providing data. And in this case, they are actually looking at Twitter and filtering all the tweets that are related to cryptocurrencies for us to work with. So they are the providers of the data. And as you said, this is also a project in collaboration with social scientists and computer scientists, as you can imagine, because they are doing those tough, using the modern technologies to process the data, pre-process the text. And
wow, that sounds great. And I keep me informed as to what's going on. But you wanted to ask something else.
So I had one, so the question was about the exchange data that you had. What is the source of that data? You have actually, I saw it on one table that for each user ID, you have the trade information. And then you're using the number of exchanges as a predictor or variable in your...
We know the number of exchanges on which the cryptocurrency was traded. Okay. We don't always know the number of exchanges in which the pump took place. Even though some of the pumps, a very small number of pumps, will list more than one exchange. So we do have, for a very small number of the pumps, maybe 400 of them, we do know that whether they use multiple exchanges or not to run the pumps.
So I was just trying to understand the source of that data, so the trade data, basically. So you
where the cryptocurrencies are traded, that's data that you can just get from, CoinMarketCap, because they list every single exchange, and so you can see where every single currency is being traded.
Okay.
In terms of that data you can get from CoinMarketCap. The other thing is that what I was going to say is the number of exchanges that are involved in the pump. That is data that the pumps would themselves say. I mean, the one pump we looked at didn't say what exchange to use. Okay, but some of the pumps did, and sometimes most often, if they did have an exchange, it was just one. But sometimes it was more than one.
Mm-hmm. Thank you very much.
I think if I can interject, I think Gizem, you were focusing on that table from the previous paper of Neil.
Yes.
The one from
JME.
Okay. So ask the question again. Wait, what was it? Okay, so
I was asking for the source because it was
the source of these data.
At the exchange level, you had that data. So I was just
had this. Okay, so what happened with these data? Okay, I got it. Sorry. Okay,
no
thank
problem.
you.
Thank you, Kier.
Yeah, thank you, Kier. Okay, so what happened was when Mt. Gox collapsed, and it collapsed because of because it lost about 200,000 Bitcoins or maybe more when they were not very expensive, but then when they were very, very expensive, they had a big debt, okay? So they were trying to somehow survive, and the idea of these fraudulent traders were to basically was to just generate more trade for Mt. Gox. But anyway, what happened at some point is they went bankrupt, and somehow these data ended up on the internet. Okay, I don't know how these data got to the internet, but they did, and it was just for that one exchange, and they listed the account numbers. And so we felt, okay, this is great to use this data, especially because it's anonymous in the sense that we don't know who the users are. So that was just pure luck that happened. And you're right, that almost never happens, and it'll be really helpful, for understanding these data. I mean, maybe you guys will get something like that from DARPA. If you could find it, you could find out accounts, on exchanges. But there are some exchanges that operate in the U.S., so maybe they would cooperate. Who knows? But there probably aren't any pumps on those exchanges. Okay, well, interesting. I look forward to seeing that coming out. Okay, other questions, thoughts, comments? This has been great. Okay, well, thanks. Thanks very much.
Thank you, Neil. That's really terrific. Thanks for showing us the frontier. Yeah.